All right, hey there, everybody. Sorry, just a little bit behind on getting that going there. But I'm Christopher Hanks with Texas West Capital. And this is what, Friday, the 5th of November, 2021. Guys, we are getting so close to Christmas. How dare I speak about Christmas? Thanksgiving still has to come, right? Yeah. There's a lot of memes going around about Black Friday shopping for Christmas, having people out there on their surfboards and whatnot getting ready to attack the ships that are just sitting out there with all those great products that you guys are wanting, right? Anyway, lots of stuff going on, man, and it just keeps feeding into this narrative that man, oh man, it's just starting and it's going to go up so huge, so great. And guys, as I've continued to try and explain to you, this is usually how the end of a bull market comes about. Bull markets don't end on pessimism; they end on exuberance. Bear markets end on pessimism, or yes, on pessimism, right? So everybody wants to buy at the top because everybody else happened. It seems like it can't stop. It seems like it's going to go up forever, man. Everything is just in your favor until it's not anymore, right? And just the opposite at the lows. Nobody wants to buy at the lows. Everybody goes to look for a bargain when they go to the store to buy something, right? It doesn't matter what it is, whether it's just something you want to get or something that you need to get. You go buy a steak, and if it says $11.56 a pound, and then you look right over and there's one where it says $11.29 a pound, guess which one you're probably picking up, all things held equal. Yeah, you shop for bargains generally, except in the stock market, guys, or, any of the markets, stock market, commodities, whatever. Everybody is fearful on the way down. Nobody wants to buy. They don't want to buy until it breaks out and heads higher again. And that's exactly why y'all go poor. You go poor. Oh, man. See, I was going to say, this is why you guys get rich, but you don't get rich that way, right? What I mean is, it's why you end up losing more money than you make for most people in the markets, okay? It's no surprise. It's no new news. It's no new news. There we go. That most people that enter the market end up leaving it. And they leave it without their money they came in with, and many times without a lot more money that they put in afterward. It's just because, again, they don't take the time to learn how to do it correctly. And you got a lot of people out there right now, guys, shilling all these systems and all these things that are guaranteed to make you so much money. Guess what? They mostly don't work. It's, it's not, they just don't, And even if they do, even if the ones that do, they don't give you any other kind of education, any other kind of training, any other kind of understanding of markets in general and risk management, all these things, to help you implement their system correctly so that it makes you money. And so you go in, they tell you what you want to hear, get rich overnight, you're going to get left behind if you don't do these things, all that kind of stuff. And then, they put your money in their pocket and they don't worry about it after that. So, good times, right? Hey, listen, you can join us at howtotradetowin.com. We'd love to have you there. We take a different approach to it, guys. As anybody will tell you, there's probably people here in the audience right now that are members of what we do, guys. I take it seriously. I don't, again, I don't have to do this. I do this because, I'm driven to create, right? It's that entrepreneurial side of me. But at the end of the day, I make my money trading, I make some money doing this, but I mean, it's, my money comes from trading, right? So I can choose not to do this and still make my money and not spend all these hours every day doing it. But, again, I'm driven to build, driven to create. And so that's what I do here. But the way I look at it is, listen, if I'm not doing what I can here to actually help you succeed, then what's the use of me doing it? So we take a different approach, guys. I try and explain to you a lot more about how and why the market moves like it does, which really has to do with psychology, guys. It has to do with the psychology of you, the psychology of the other players in the market, how all that works. And we take so many different approaches to show you that no matter what, no matter how you approach that market, if you approach it with these basics in mind, then all your systems work. Elliott wave, Wyckoff, supply and demand. I mean, all these different things, they end up working. They all take you to the same general location as long as you do them correctly. But that doesn't happen overnight. That takes time and practice, guys, and you have to practice it correctly. I get people all the time that tell me, hey, listen, I'm not a newbie. I've been trading for 3 years. And I said, okay, well, have you been trading consistently for 3 years? Yeah, I trade all the time. Okay. Have you been profiting? Well, yeah. Consistently? Define consistently. Well, have you made more money over the last 3 years consistently than you've lost? No. Okay, you're still new. You're still an amateur. You still haven't figured it out yet. That's not to put you down or whatever, but it's just to get you to understand where you are. Because if you're honest about yourself with where you are, then you can get to where you want to go. As long as you continue to lie to yourself and think, oh yeah, I could do all this. It's no problem. I'm great. The market's going to kick you in the face. Okay? Everybody is an expert in a bull market. And I don't think the bull market has a lot left in it. Now, has it gone on a bit longer than expected? Sure. But, again, we're talking about a large cycle, guys. We're talking about 233 years. It takes some time, right? For the players to kind of pull out of it. But remember what I told you. When you get to a point in the market where everybody says the same thing. So you get in this bull market and everybody from your retail investor to your professionals to your funds, all that stuff. When everybody says, look, it's going up. There's a melt up coming. It's usually not, guys, okay? The last time that was said, I think, was around 2019, I think. And then we saw like a 20% correction right after that was said. So you guys have to be careful with it. It's all about that psychology of it, all right? So anyway, you can join us here at howtotradetowin.com. We'd love to have you there. Here's the thing, guys. There is a special pricing that we do for members that we've had that have been with us since the beginning. These guys that have supported us day in, day out from the beginning. And we grandfathered in their old pricing. And so no matter how high we raise our prices or how we change it about, they will always get this pricing, right? Now, you've got a chance to get this pricing as well for as long as you remain a member. All you have to do is come on over here, go up to join us, go to the Tier 3 biannual, that's the 6-month subscription there, purchase it. You do that, I will see that you purchase it. I will go into your account. I will then set your account up to give you that legacy pricing, that OG legacy pricing. And what that means is as long as you remain a member after that, you're going to get those prices. And those prices are significant, guys. Just as an example, if you do a month-to-month, normally you're paying $199. And trust me, the content we put out and the info we put out is worth a lot more than $199 a month. But anyway, we do that, right? But Legacy gets that for $100 a month. Half price, guys. And if we raise that up to $249, which we might be doing here before too much longer, because we're continuing to add more and more content, they're still going to get it $100. But more importantly, if you go in and you buy that biannual, that's 6 months, right? So we already give you a discount if you're buying multiple months, right? So normally it's $199. If you buy the biannual, I think it's like $895. So you're already getting a discount off that month to month, right? But here's the thing. The biannual, like I said, is like $895. And the yearly for our guys and gals that are with that OG Legacy pricing, the yearly is just about $55 more. It's around $950. Yeah. So, again, guys, it's a significant bit of savings. It's a savings all the way up it. So I think this is probably going to be the only time we ever do this. I can't guarantee it will be, but I have no plans, no reason to do this any other time. This is all just part of this whole 4th anniversary thing we've got going on now that we've been in, business over 4 years. So if you want to do that, do that. If you are already a member and you have time already, we've got lots of members, that they take advantage of the discounts and the specials and things that happen as they happen. So we got some members that are paid up through 2023 already. But if you're a member right now and you've got this you've got this current pricing, this regular pricing, and you've got time left on your account, whatever it is, Tier 1, Tier 2, Tier 3, and you're interested in doing this, let me know. Because I'll go in there, I'll walk you through it, and we'll get it done and make sure that you don't lose any of the time that you currently have. Make sure it's all added in there. And you can go on about your business and do pretty dang good there, all right? Anyway, guys, man, there it is. We'd love to have you there. Who's here already? Let me see here. We've got Bill checking in. Hank's here. What's going on, guys? Chris Baker chilling out over here. Mahdi is here. Man, I always hope I say your name right. I think I pushed the H a bit there so that way maybe we can hear it. I think that's what you do, right? I definitely don't mean it disrespectfully, guys, if I ever mispronounce your names. Again, it's important to me that I get it correct. So let me know if I'm getting it wrong and help me phonetically understand how to say it. Hey there, Brian Riley. Good to see you. Leighton Stone Blue checking in from across the pond over there. Good to see you as well. Michael Williams. Who else is here? Hobby Dons, what's up? It's Ari. Data says, would you say if I only would learn to sit on my hands just a little more often? That's the big thing with all trading, right? It's easy to get caught up, guys. I always say, listen, trading is simple, but it's not easy. And what I mean is, really, price just moves between areas of liquidity, right? So if it's coming down and it hits a pocket of demand, liquidity there, man, it's going to shoot up. If it's going up and it hits liquidity, it hits supply, boom, it's going to come down, right? That's simple. It's much more difficult to actually get in there and do it correctly. Because we are emotional by nature, and that's what's great about being humans, about being human beings, is that we have this emotion, that we can make these emotional connections with other people, right? Unfortunately, in the markets, that doesn't always work so well. As a matter of fact, it usually doesn't. And so it can make it difficult to trade if you're not aware of these things that I discuss often. All right? So make sure that you guys are paying attention to that part especially. Hey there, good morning and happy Friday there, Andrew Bennett. Good to see you checking in. Diego's checking in as well. He says, I've been away all week. Well, good to see you here now, man. Hey, Brian Allen, real job until you don't need it anymore, right? Hank started selling parts of his long-term holds, he says. Let me see here. Is that NENAD? I'm honestly, I'm not even sure how to pronounce that. So if you want to give me a phonetic spelling, I would love it, and that would help me be able to pronounce your name. But hey there, good to see you checking in. Let me see here. Well, we'll be looking forward to you coming in, Brian. Definitely, man. That's right. Know nothing, that's why I'm here. I know nothing either. At least, in the grand scheme of things, right? I'm just a guy that does a thing, guys. I keep telling you this. You're going to have everybody out there, they're going to use the words expert and all these things to make you think, oh, they're the person that you need to follow along. And maybe I should. I don't know. Maybe my marketing's just terrible, but I cannot stand the idea of you joining for some reason that isn't legitimate, So I can't stand the idea of me using buzzwords just to get you in there so that you buy. I want you to buy because you listen, you go, man, that makes sense. Maybe he knows what he's talking about. That's why. Because otherwise, then you come in and then you're unhappy. It's not what you're thinking, and then you're miserable. I don't want that. We don't need that. We have an amazing community of traders, guys, that have been, and I think it's because so many of them been with us for years and years and years. And so they're extremely helpful, really kind, man. They love it. They all feel like, hey, if you're coming in and you want to really learn, that's great for them, because that's just more eyes out there looking at all these different markets that we trade. Cryptos, FX, commodities, legacy, metals, whatever it is, right? And so you've got more people potentially with more trained eyes potentially finding opportunities. Everybody wins. So our community is a really helpful group. So yeah. But like I said, guys, man, I'm just a guy that does a thing, and I've happened to become pretty successful at it. And I'm going to try and help you as long as you're willing to be open and humble and accept that maybe you don't really understand what's going on with the market. There's a lot of possibility for you. If you're resistant, if you're one of those types that believes that you know everything there is to know about a thing, I've been doing this as long as I have. I still don't know everything there is to know about trading or markets, guys. I firmly believe that. There's always something new happening. But there are things that you pick up after doing it for a quarter of a century, right? You go through multiple bear markets in different markets, legacy, crypto, all these things. You see what goes on. You go through multiple depressions or recession, not depression, not that old. Multiple recessions, though, and you see how the economy kind of goes in, and you watch what the Fed does. So you get these ideas about what may actually be going on, and that's what I'm trying to share with you guys. All right. Hey there, TV Canal. Budman here. What's going on, guys? Let me see here. Everyone is a genius season, Mahi says. Yes, exactly. Michael, what's up? He says, glad for your down-to-earth, big picture comments on the BMA video last night. Yeah, we always, we get caught up sometimes on this, hour-to-hour kind of chart thing, and it's good to step out and remind yourself of where you are. So we're going to take a look at that here today as well. Because it's really easy to get in there and go, oh my God, the bottom's dropping out, because locally it's moving down. But if you step out to the bigger picture, like, oh, okay, maybe not quite so bad. Maybe not really even bad at all, So important reminder there. TV Canal, what's up? Mike Slane is here. Christopher Arksky says, what do you think will be the sign of the top in the stock market? Do we have to wait for the traditional 3 rate hikes? Yeah, the what is it? What is that term? Something like hike, stumble or something like that. It's actually 2. Well, no, I guess it's the 3-20 because by the 3rd one is when the market then stumbles, right? Yeah. So we'll talk about that here in a minute. Do we see a crypto crash that precedes the stock market crash? You know, so here's the thing, guys. Crypto. The one thing you have to understand, I don't care if you've been in since 2010 or you just got in the last few months. The one thing you have to understand is crypto has only been around in a secular bull market in the economy, right? So stock market has gone up since the GFC back in 2008, 2009, right? It's gone up since then. At that point, 2010 there, it just really kind of came out, Bitcoin came out. So it's only been in this growth phase. We don't know what's going to happen if we had a recession, like a long-term recession, or worse yet, like I expect, a depression, right? You know, there's a lot of people out there, a lot of big people who are telling you, oh yeah, it's going to do great, it's going to be great, it's going to be whatever. But the reality of it is, nobody knows for sure. And so if we then step back and go, okay, well, normally in a depression or recession or something like that, where there's an economic turndown, right? Risky assets are not what's held. People get rid of risky assets. They go to cash because they want to have cash to be able to pay their bills and do things. Remember, if there's a recession, what that means is economic output is decreasing. That means jobs are going away as a result. That means, potentially bond defaults. People are losing money, right? The stock market goes down. Whatever they were rich in on paper, they no longer are, right? And so people get out of all these other risky assets and they get into cash because they want to be able to make sure that they've got the money to pay for the things they need to pay, their bills and whatever. People are scared they're going to lose a job. Their company may go out of business. And then it'll be difficult to get a job because everything else is tightening, right? And so, by the way, guys, this is why I always, have said, whatever you're doing, whatever job function you are doing, you should be constantly increasing your skill set. I'm known for just having this wide range of skills, right? I do so many different things because, for me, it interests me. But at the end of the day, no matter what happens, I'm going to be okay, right? I know how to do all these different things, whether it's working with my hands or whether it's working with my head, right? Sometimes hitting my head on something, right? But I am such a staunch advocate for that, guys. If you are just sitting around and not increasing your skill set at all when times are good, then when times are difficult, you're going to have a lot more trouble. Okay? So just some thoughts there on that. But as far as crypto goes, man, it's a riskier asset than, say, stocks. So you would think that it should crash down before stocks, right? But there's a lot of hype in here. There's a lot of whatever, at this particular junction of this particular bull market, it's just everybody is super crazy out there for things, right? They just jump, right? So they get on the hottest, newest thing, bleed it, get out. And they keep going boom, 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 bouncing around, right? So, thoughts on this Shiba Inu, squid, whatever that stupid token is. It really has nothing to do with anything other than, hey, it's got the name of the show that everybody was watching, right? And y'all jumped in on it. And it's fine if you jump in on it with the understanding that that's the only reason why it's doing anything. And so that way you're able to take your profits and get out. But too many people are new to the markets and they think, man, look at this thing, it's soaring. And in their head, they're already buying their Lambos. They're already buying their wives. Yeah, I said that. They're already buying their islands. The money is already spent in their head, which makes it psychologically, emotionally difficult to sell when you should sell. And you end up holding on to it. And then you end up, if you're lucky, you get out with some sort of profit. But for most people, they end up losing money when they were well up. This is what goes on in the markets, guys. This is the reality of being a trader in the market, being new. These are the things you have to learn to overcome. Unfortunately, most people come in on the end of that bull market where everything's pop, and they don't think that they have to understand. But even if they do have to understand, they're not taking the if they realize they do, they're not really taking the seriousness of doing it. It takes time to get to that position where you're consistently able to fight back your emotion, as you should. So we end up with a lot of people losing a lot of money. I've said it before, I'll say it again. Everybody's like, oh, this is this great big transfer of wealth coming in, meme stocks, crypto. Yeah, all the rich guys are getting socked in the gut, man. All that money's coming out to the poor people. Now, what's going to end up happening, guys, like every other bull market before it, the rich are going to get richer. The rich are the ones that already had the assets. Asset appreciation on that. They're just collecting assets over and over and over again, right? Most of the new people that come in that are just starting in and whatever, they're going to lose, even if they've made a good amount of money, especially if it's only on paper, they're going to lose it all, or most of it, or more than all of it. That is historically what happens, guys. That's not me being a downer. That's not me saying, me being just anti-new trade or anything. I'm trying to get you guys to realize what the realities are of being in the markets, especially at this time. Because the markets keep going up and people hear me and they go, oh, whatever, he's an idiot. He doesn't know what he's talking about. Look, it keeps going up. Completely obtuse to what's going on. Those people are. You have to be aware, guys. The only place you probably have to be more aware than in the stock market is in war, right? You got to be aware of what's going on around you, right? You don't want to get shot or hurt or whatever, right? The stock market, I'm not comparing the stock market to war. I'm just saying that you have to be aware. You can't keep lying to yourself about what's going on and then expect to come out okay. It's going to hurt you guys, okay? Is that Autumn there? ATUM, good to see you checking in. Ernest of Gaia, what's going on? Good to see you here as always. You're fine. It's fine. Your name sounds like Leonard. Okay. He says, I was a tier 3 with you guys. Discord name was Rednecks. Hey, I remember you, buddy. What's going on, man? I do now. Yes, sir. Let me see here. Hank says 40,000 is a nice psychological level. Magnet before, disbelief after. I don't know if you're speaking of Bitcoin or if you're speaking of the stock market of the Dow Jones on that. Christopher says, will there be difficult times? In 20 years, we'll all get a paycheck to sit at home while Elon's robots do our jobs. Maybe those video gamers have it right. They're ahead of the curve. No, I don't think so. Here's the thing, guys. As things become more and more automated, it's done throughout history, right? It decreases jobs in the more manual labor area, and it creates new jobs in these other areas. I mean, the robots can't just run autonomously, right? You've got to have somebody in there making sure that they're doing what they need to do, making sure they don't go crazy and haywire, making sure that if they have a little issue that they're getting taken care of, right? And you got to have people to repair them and all that stuff. And, so there's all these other jobs that come about, even though you lose the more manual labor type jobs. So I don't think everybody's going to be sitting around sipping margaritas on the beach, while they're getting handed a paycheck. I think, the whole idea of increasing your skill set all the time, guys. I think that's where it's at. If there was a severe recession, initially there could be a crypto sell-off like in March 2019. The government would respond by giving out more checks. Inflation continues and Bitcoin number go up. I don't think so. So we look at Biden, right? So Biden had this supposedly 81 million votes, right? It's still questionable about it. Whatever, I don't care. 81 million votes is what he got, right? It was what it says he got to win the election. His approval rating right now is 38%. I don't think there's a lot you can get done when you do that. And so worse yet, if you look at the Democrats, Biden had this ambitious $3+ trillion bill, right, that he wanted to push through. Republicans stepped back and said, nope, we're not doing that. You guys have to fight it out. You're going to have to do something called reconciliation or whatever. And in order to do that, you have to have so many votes to pass it, but there's certain rules with that. You can't have certain things in the bill. So his $3 billion or $3 trillion plus bill has been whittled down to half right now because the Democrats themselves are fighting. You've got the moderate Democrats and then you've got the progressives. And the progressives are like, hell no, we won't go, right? They're saying, we're not going to do this unless you give us more of this, guarantees for this other larger spending. And even the moderate Democrats are pushing back like, whoa, we're getting kind of out of hand here, right? Democrats, the Republicans just sitting back there going, yeah, you guys do what you need to do. We ain't going to be a part of this. And so, that kind of limits how much you can get out there. But the further your approval rating is, the less you can get done. So yeah, economy goes off a cliff, does its thing or whatever. I'm not sure that the government can do all these things that everybody thinks that they're going to do. And even if they can, I'm not so sure it fixes a lot. Because here's the thing, if you're in the midst of a recession, and sure, government's giving you money, whatever, you're still concerned about that recession. If you've lost a job, you're concerned about it. You need to find a job. You don't know how long this government stuff's going to last, right? So I don't know that necessarily there's anything they do would be this great thing and they'd push Bitcoin back up. I don't think that really seems logical at the moment. Now, I'm not saying it can't happen, obviously, because, I can't guarantee, guys, just like everybody else out there, nobody can guarantee you what's going to happen. But with what I know, in my education level and whatnot, in my experience, I don't see that being the thing that happens. Corrections come at a time when markets become overextended. And it's not that the market is overextended, it's just that the social mood is overextended. Exuberance in general. I mean, look at what's going on right now, guys. With the great resignation, right? That's supposedly a thing that's going on. By the way, let me go ahead and do this real quick. Elliott Wave International, you guys know I like pushing some of their stuff here. They just released this video right here. Let me go ahead. I'll just give you this link right here. We'll put it on there. And they have a different take on this great resignation thing, and it's something that I've been talking about as well. So I was glad to see them kind of coming up there and saying that same thing. But it comes down to the end of the day that people just basically feel like they can do this. We have these people feel like they can leave and they can command higher wages and they can they can have their pick of jobs and all this thing, and it seems like it's legitimate for this temporary time right now, right? But I think that's all it is. I think it's just this temporary time. And so if the market rolls off, if the economy rolls off the cliff, right, these people are going to have trouble finding jobs that they want, much less jobs that they can get. And so, I think Mark Cuban made this big deal about supposedly 4% of those who quit did so because of their crypto gains, right? I'm pretty sure most of those people are talking about paper gains, which again, we know how fast the market can reverse, right? So what happens when all of a sudden it reverses? And they don't have government subsidies keeping them around, the extended government subsidies like we had during the pandemic, right? Which is part of the reason why they were jumping in there doing all that. They had time on their hands and a little extra money in their pocket. And hey, let's go gamble. Let's go play. We've talked before about how Robinhood itself and companies like that are all making it like games, right? They make this whole trading thing like a game. Guys, trading is not a game. And so it seems like it works. It seems like it's good when the market's in this bullish phase, that it goes up and it seems like it can't do any wrong, right? But what happens when it changes? Gamification of things, we've talked about this for the past 2 years, is what has become of everything right now. Everything has been gamified, right? You get badges for completing certain tasks and whatever. God, I think even Netflix and some of those subscription services do that as well. I'm like, are you kidding me? Don't give me a stupid badge. Just let me see what I want to watch. And stop asking me if I'm done watching it. If I'm done watching it, I'll turn it off. But anyway, guys, you see, there's all this going on right now. All this going on. And everybody's just like, well, whatever. It's going to keep doing, it's going to keep going, right? And it never does that. It never keeps going forever, guys. It always has a come to Jesus meeting. Always. Most of you are going to hear me right now and just play it off as I'm an idiot. I don't know what I'm talking about. It is what it is, guys. Do what you need to do. Do you. Don't come crying when things happen the way that I've been talking about it. I mean, it just, Again, I can't guarantee that these things are going to happen as I'm saying, but dang it, historically, there's a lot of precedent for it, right? Everybody always, at every bull market, everybody thinks everything's different. This time, it's different. And yet, it's always the same. What other things do we have going on right now? FTX has become this huge thing, right? What, their name's on everything now, right? Down there in Miami. And then what, they were all over, we just had the World Series. They were all over everything there, right? Yeah, I don't know, guys. Just generally, that's an indication of overexuberance in what's going on. And so, I don't know. I think if you look back, I don't know. Maybe not the great financial crisis. Maybe right before like the dot-com bubble, because we've looked at that. That's just one large reaccumulation range from like late 90s into 2010, right? And so I think maybe they're at the beginning. I bet you'll see a lot of similarities with stuff like that back then. Like I said, I don't think 2008 or whatever, the great financial crisis, you'll really see it there, because that was an interior breakdown and move up of that larger decade of correction, basically. So yeah. Ernest says robots can't grow healthy food. My pronouncing of your name is good there, Mahdi. Maddie, like cat. Okay, gotcha. I appreciate it. Thank you. Yao F Pack, what's up? As always here. Good to see you there. Hank says 40,000 on the Dow Jones. It's funny you mentioned that, Hank. I was going to mention that actually today. That 40,000 mark on the Dow Jones. So I've got the chart up here. We'll talk about that in a minute too. Venture says, looks like Bitcoin's Bollinger Bands are starting to squeeze together. Which ones are we looking at? What time frame? Oh, we're looking right here on the daily, huh? Look at that. So yeah, consolidation in that area, right? I mean, again, we zoom out here, guys, and this is what I was talking to Discord about, our members in Discord, and it's just this idea that you get caught up in what's going here and all this really ridiculous PA in this area. Just stupid. It makes it really hard to count. But at the end of the day, all we've done, guys, is just pull back off this high here in 3 waves so far, right? Now, maybe this is, I don't know. I've got a count that I've got on there, right? But maybe this is like a 1, 2, and maybe this is a 3, 4 as a triangle here. Maybe this is ABC, 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 ABC. And you get a triangle leading to that 5. And then you have, 1, 2, 3, whatever going on there. So, there's a lot of stuff that could be going on. But at the end of the day, the big picture is we are above the daily pivot. We're above that daily pivot right around 57,300. And I think that's the, again, locally, that's the big picture. Everything else going on there could just be nothing more than part of this whole correction thing here, right? I would be concerned if Bitcoin were to drop below this swing low over here, this 39.6. That's where my concern would come in. As long as we're above that, though, my overall view is higher. And it should be. Because this is your large swing right here. This is your swing high to swing low. This is your, how big is this? That's a 25% correction right there. That's your point of contention at the low on that. Until that point, you may just pull back here, but really it's all part of this bigger picture. And you say, but man, Chris, we're at 61,000 right now, and that's all the way down there 39,000. What did I say? 39,600. Man, that's a long way, man. Again, this is the big picture. Do what you need to do on them shorter time frames, but don't go calling, oh my God, we're all going to die. It's going down to 0 now just because of what's happening right here in the last few days. That's just silliness. Even dropping below here, you shouldn't be saying, oh my God, we're going down to 0 or anything stupid like that. Yeah, sure, we could go down, but it's way too early at that point to say that. There's a lot of stuff that has to happen by the time you get there. But everybody gets hyped on it because you see this stuff. And I'm seeing this because I'm seeing what people are posting there on Twitter, and it's just silly. I don't know how you guys can sit there, be new to trading, and keep your sanity with what's going on in crypto Twitter. Absolute craziness. I would just give up. If it was me back in 95 when I first started, I would probably have just given up. It's just so silly. All this doom and gloom one day, and then the same person's hype and love the next day, and then doom and gloom the next day. Man, oh man. How's a person supposed to keep their sanity if they don't know what's going on, really? So you guys got to be careful out there. Let's see. Let me see here. Pep, what's going on? He says, are the on-chain metrics a big indicator of trading? I mean, I think you can use them until you can't anymore. We've already seen over this last year this whole idea of how much Bitcoin is held on the exchange. That metric may not really be as effective as it used to be, because everybody's kind of getting to this idea of, well, not your coins, not your coins if you're not holding them, right? And so, and above that, a lot of this price increase has been driven by institutional investment, right? Which means they have to have their coins custodied, which takes them off the exchange. So just because there's some all forever low there doesn't mean that that things are necessarily bullish, right? So I think, again, it's this whole people are trying to understand how the on-chain metrics work, and they're still pretty new, really. We really kind of, this things, that these companies have out now are really the things we've been looking at the last few years. So we don't have a lot of information on what they mean, right? Just because they meant one thing one time doesn't necessarily mean the next thing the next time. You need this history, obviously. And so, like I said, some of these things we're kind of finding out aren't as indicative as what we thought originally. But I mean, it can't hurt if you understand what you're looking at and what it's supposed to mean. It can't, overly hurt, I guess. But yeah, just keep it in context with everything else, I think. Let me see here. Who didn't say what, Hank? I can't watch all what you guys are typing all the time while I'm talking up here. You'll have to tell me who didn't say what. Let me see here. Hank says bond yields down, Bitcoin down, gold up. I don't know, gold up. So here's so right now, this is the big picture, guys. If we can get a breakout above this swing high right here at 64,300, that should be a green light to head higher. I mean, that's really what we're looking at. If we drop down below the daily pivot there, I would look, first of all, right here around this, right here, it's this 38.2 on this particular, what we've got pulled here, from this swing here. The 38.2 right there around 54.8 gets you this here. And so you kind of get down there, and then of course you got the S1 pivot down here at 47,500 or so. So you can watch those things if it's dropping, but for right now, while we're above the pivot, I mean, you should definitely be thinking higher unless we drop below that. So, this area is, like I said, if we zoom in here, whoops, see here. If we zoom in here, you see this PA, this is really crappy PA right here. This whole nonsense right here. Realistically, we're just going sideways, guys, from right about here, which is the 15th of October. So for about 3 weeks or so, we're just kind of going sideways. That's all that's really happening here. We've had some strong drops here and here, which really kind of make these counts kind of crazy. Again, looking at this here, maybe we've got this leading diagonal playing out here. So, again, 1, 2 here, and then 1, 2, 3, 4, and then maybe a 5 for a leading diagonal. Maybe, I don't know. That's kind of, if you're bullish, that's what you're looking for. But that means you got to get a breakout above this descending channel resistance. And we haven't had that yet. So if you get that breakout, you've got a $3,531 target based on the height of that. But right now, we're getting this pullback locally here in what appears to be 3 waves. It's almost invalidated here. Now, if we can get a rally off here and head up, we've got a minimum wave 3 up here at 66,096. If If it drops down below here, well, then we've probably got an A, a B, and we're working on a C here. In which case, then we'll have to look at how much further we have here. Let me see. This first drop at wave 2 here hit that 78.6 retracement. So I mean, maybe this comes down and hits this this line right here, right around that 90% at 6,400. This is that support resistance kind of area. Right now, we're just kind of sitting in this high volume node. This is the 30-minute chart. We'll see how it plays out. 15-minute could run up. 1 hour is reset down and oversold. That's a good sign. 4 hours down and oversold here. So again, a lot of reason for the possibility that we could get in this 4-hour wick here. The man in this wick right here. That we could get a rally up and out of that. If we drop down below 67.28 and 77 cents, then that invalidates the wave 2. But then I'm looking at potentially an A, B, and a C coming down here to do it. If we drop below this wave 4 right here at 60,070, then that kind of invalidates this, and we may be looking for it to pull back all the way here to the S1 pivot on the 4 hour right here around 58,000 or so, 58,100. So we'll see what happens if we. I mean, we're getting caught up here on this 4 hour pivot. 1, 2, bounced right above it, 3, bounced on it, 4, 5, trying to get a reversal off this on the 6 candle here. So that, and it's held up over here as well. So the pivot's doing a good job of holding support. We just need to see price now rally and give us those higher highs and higher lows to give us a local bullish market structure. Until that, we can look for it to head on down further toward those other targets that we were talking about there. Biden didn't say he got 81 million votes. No, I'm saying that's what's. I didn't say Biden said that. Why? See, Hank, you're not listening. Man, you gotta listen. I never said Biden said that. I said other people are arguing that he didn't. And I said, I don't care either way. I'm not in this to be political. I'm just saying he got a significant amount of votes, supposedly, and now he's at a 38, right away he's practically at a 38% approval rating. I'm trying to get you to understand that spread that's in there, the significance of it. When you're trying to say, oh, the government's going to do more, and it's going to have some kind of impact, some kind of positive impact. If people don't approve of you and what you're doing, it makes it hard for you to do anything. People, even if they don't like Republicans, we get to the point where they don't like Biden more because they're going to say, well, look, Biden caused me to lose all this money. He caused the stock market to crash. And I'm not saying that's the correct way to look at it. I'm just saying that's what people think. You got to listen to what I'm saying. Let me see here. Anyway, like I said, guys, this isn't about that. It's just about this understanding of what the administration can do, relative to what people feel or think about them and whatnot. So yeah. Let me see here. What's going on, GT? Good to see you. Teo checking in as well. My friend from Romania there. Good to have you here. Let me see here. So anyway, yeah. So that's kind of what I'm talking about, guys. Remember, everything I talk about has to do... If you guys ever think anything differently with something I'm saying, just step back and say, okay, well, how does that have to do with investment or trading psychology? Because that's all I'm trying to get to. I'm not out here to give personal opinions on vaccine mandates. By the way, or, Biden or Trump or Republicans and Democrats. I'm explaining how the system works, as far as what goes on with the bill and the reconciliation, all that kind of stuff. There's a legal process there that they have to follow. And then, so my goal here is to help you understand that, because most people don't know these things. But beyond that, to understand how does that potentially affect that investment or that trading psychology, or how is all of this part of what's going on? Again, when we talk about social mood, it's not just about social mood in the markets. It's about social mood everywhere. What are people watching? What are people doing? Again, Elliott Wave Institute, or not Elliott Wave International, Robert Prechter, from that started this whole socionomics thing, right? So they've got a socionomics branch. And they put out some pretty great videos, guys. I mean, I've got a subscription there. You guys, I would say you should have it if you're really interested in these things and how the markets move. But one thing they did was really cool. They did this thing where they looked at movies, right? And they said, okay, well, most of the time, the movies that do the best in the year are these really positive movies, feel-good movies. They make you feel good, right? But they said every so often, there are these movies that do well, which are very morose or kind of not so cheery movies, right? And what they found is that coincides with what's going on with everything else. That coincides with presidencies and elections and stock market moves and everything else. And so it's a pretty cool video, and I don't have the link on me at the moment. If I can remember where it is, guys, I'll post it onto Twitter and other social media that we have, so you guys can jump on that and check it out. But like I said, I'm really, really, really intrigued by socionomic theory because like I've explained to you guys, a couple of over the last few years, I guess now, these things that I think I've come to over 25 years of doing this. But they align so closely with this whole idea of socionomic theory. And that's why it's just completely blowing my mind. It's like, I'm thinking I'm picking this up, just, and not everybody's picking this up kind of thing, which they aren't. But then you find out, something significant like this is coming out. And it just really gets in there with the same ideas, the same thoughts, the same whole kind of, the market is just a gauge of what everybody else, of what society, their social mood is. So, when you think of it that way, that social mood, the market's just a metric on that, right? So it's not that the market drives social mood, it's that the social mood is driving the markets. And I think if you do that, you get a lot clearer, a lot more correct understanding of what's going on in the markets. And right now, we're just at this level of exuberance, like I've told you, Again, we look at how many people are quitting their jobs and all that. They feel like they can go, they feel like they've got time and the ability to find new jobs. And people, that are in jobs that they, people that are in jobs that they maybe don't want to be in anymore. They want to maybe transition to another field. They go on and do that. And so that video I showed you earlier that I posted on Twitter there, I'll post on the other social media after this session that we're doing here. They go into more depth in this, but it's a great thought process, a great thinking thing to look at because it is, if you look at it, this whole idea of this great resignation doesn't make a lot of sense, but most people don't think really into it. They don't think beyond what, again, the sound bites are. And I'm going to tell you guys this right now. If you are trading based on sound bites, if you're living your life based on sound bites, you're always going to never get as far as you can go. You'll always be limited because most of the time those sound bites are incorrect. But people harp on them and pass them around as if truth. And once you get sucked into that, you fail to be able to think beyond that. You don't consider anything else, anything different. And so then you wonder why things aren't working the way you expect them to work when you expect them to work, right? Again, guys, I've said it before, trading can be the loneliest, one of the loneliest professions out there because you're trading for you. You're not trading for anybody else, right? Which I guess is another good thing about our community because you've got a lot of other people in there who are in that same thing that they're doing. And so it helps you, because you don't feel so alone, the only person out there. But it can be very lonely. It can be, again, you're doing it for you, right? Especially if that's what you do for a living and you don't have, all this daily contact with all these people you work with and whatnot. So, yeah. Comment man, what's going on, buddy? Good to see you checking in as always. Let me see here. Just kind of catch up with you guys here. Leighton says, I wouldn't say society is in a state of exuberance. Quite the opposite, in fact. That doesn't reflect what's going on in the markets. Oh, I think they are exactly in a state of exuberance. They're in a state of heightened of complacency, they're definitely not in a very negative mood in general. There's some fears about some things with some places, some local places. I guess I should always kind of preface this with, when I'm talking about the U.S. Because, again, the U.K. does, I think you may be talking about the U.K. and the energy crisis and stuff over there, which may affect y'all, affect your mood over there a bit more. But the fact that, here in the U.S., that people feel like they can, quit and they'll be just fine and they've got these savings they can live off for a while. This stuff doesn't normally happen in life, guys. People generally want a job. They want to have income. They want to have that safety net. In order for them to do something other, they have to really feel safe. They have to feel like, well, things are pretty okay. Because they're not going to do that when they don't feel like things are okay. So, again, I guess what I should do is say, here in the U.S. when I'm talking about it, what's going on with all that. So, yeah. Let me see here. Oh, just kind of catch up with you guys here. Telltale says now he's in this great live because he's not vaccinated, so he does not have permission to go to the gym. Yeah, it's crazy, And by the way, that's what I was going to talk about. So now we get on with these things. Again, you talk about with everything that's going on with the economy, right? And everything's going on here. And so what's happened recently? We had the Fed came out Wednesday. They said, hey, listen, we're going to taper this month. Boom, that's it. $15 billion a month. They said for at least the next 2 months. So they said $15 billion November, $15 billion December. So 120 becomes 105, becomes 90 billion that they're going to be buying, after 2 months. Now basically what they said was, as long as things continue as they are, hey, we'll continue to taper, right? And so taper is generally expected to end around summer of next year, right? 15 billion or so. Now they did leave themselves an out there. They said, hey, we could raise or lower that taper depending on what's going on with the economy. Jay Powell, for his part, went out there and said, listen, taper does not necessarily mean interest rate hikes. And so we got that kind of pushing on the dollar a bit after it rallied up. You had the initial and then it rallied up. But, again, with my count, we'll look at in a minute here. It's just a wave 3 pulling back for a wave 4. So we'll see if that happens. So we've got that. So, market tightening, right? And then today, the jobs numbers came out, right? And so they were pretty robust. They were pretty good here. Let me see here. Let's see if I can find them here real quick. Sorry, guys. Trying to pull this up here real quick. It was like 500,000, I think. 531,000 increase. They had a consensus of 425, so there's they beat expectations there. 312 was the previous month. So, again, continuing to increase more of the populace that's looking for a job is getting a job. That's the way to put it. Average hourly earnings are up. They were 4.6 previously. They were expected to be 4.8. They were actually 4.9% positive, up year over year. Average weekly hours dropped from 34.8 to 34.7. Your labor force participation rate. So here's the thing. Your unemployment rate, your employment rate went up, right? The 531,000 new jobs. Your labor force participation rate, though, didn't change. It's still 61.6. So again, what that says is the people who were looking for jobs are getting jobs. But there is a segment of the population that just says, you know what, again, I'm going to sit back for a few months and not do anything. Or, you know what, I'm tired of this market. I'm just not going to look for a job right now. And so those aren't counted in the unemployment, okay? So your unemployment rate now drops. It was 4.8 previously. They expected 4.7 this time. It actually came out lower at 4.6. So a lot of good stuff here, right? Your average hourly earnings month over month. Let me see here. Yeah, it came out what were expected. They came out to 0.4%. So everything really looking kind of positive on what's going on there, right? Now, there's talks about the whole wage price spiral. I don't think we're going to get that, but people are still talking about it right now. But nonetheless, So you've got taper starting this month. You've got the non-farm payrolls came out and just said, yeah, that's what you need to do. It said, hey, listen, we're getting where we wanted to get. No surprises to the downside there. Now, so the question becomes, okay, do we get 2 hike rates next year? Do we get none? Do we get more? I'm still in that camp that believes we're going to get more. Right now, I don't think that they can't not do it. I think they've kind of, as I mentioned, this whole year, and from last year kind of coming in, that they were painting themselves in a corner. And so I don't think that they can afford not to do it. The economy, the economy's going to do what the economy's going to do. And so, the question is, who gets hurt and how bad with all this? So we'll see. We'll see how it goes. I'm not, I don't have to hold that. If things change, we'll change it. But for right now, I still think that's probably what we're looking at there. Let me see here. Thoughts on Texas real estate? Well, again, you look at, depends on where you are as anywhere else, right? And we know that Texas is huge, right? They talk about San Antonio being the recession-proof city because it did so well during the last one, whatever. But, again, I keep tabs on it a bit, especially the higher-end real estate. And we're starting to see properties dropping more and more. Their prices are dropped. And so if we talk about that, we can talk about Zillow in general, right? So you guys have heard about Zillow and what happened there. I think you have, right? Zillow, what happened with Zillow here? Let me see if I can find that chart. Oh. Well, let me see here. Yeah. So Zillow was doing this thing. They had that Z estimate or whatever, Zillow estimate. And they were buying, if the house was selling below that, they were buying it with the idea that they were going to sell it for more, right? And so what happens is that, if you guys haven't heard, they're hurting now. They're selling houses out the rear end at below what they paid for them. They are losing money. And they've got about 7,000 properties, from what I understand, that they're going to get rid of. They're getting out of this whole actually owning real estate. So what's going to happen there? Well, 7,000 houses is quite a bit. That is going to put that regardless of everything else, that should put downward pressure on home prices. Okay? Now, supposedly Redfin and a few others who were doing the same idea but just approaching it a little bit differently are ramping up theirs. So, what's going to be the end result of all that? I don't know for sure, but this to me is a big, hey, wake up, what's going on here? Because there is so much real estate tied to that, and they're just trying to dump it right now. I had mentioned the last few months that I noticed that prices were starting to pull back. And so, again, maybe this had something to do with it. Where's that Zillow chart here? I've got it here somewhere. Oh, man, look at that Zillow chart. That's the daily. Peaked out up here at February 16th of 21. Get rid of all this other stuff here and just kind of keep us on what we're looking at here. They had this false breakout here and then this huge drop. And look at that. That's a drop right there. Look at that, 40% almost. Just over a couple of days. And that was when they came out and said, listen, we're going to lay off, 25% of our workforce, and we're getting rid of the properties and all this kind of stuff. And, he's out there blaming it on just not having enough people to rehab the houses and whatever before they sell it, all that stuff. Again, guys, I think it's a bunch of nonsense. I think they were buying at the top, and they couldn't make the money that they were looking to make with the way they were doing it. And so, I think this may just be the first in a series. I think Redfin and the rest of them are going to get caught up in it as well. They're just not at this moment thinking they are. But, 50% fall from February here so far on that. If we look at this, this looks like an A, B, C to me. Which means you can see this significantly, falling significantly further when it's all said and done. Of course, they missed here. They were expecting to get 16 cents a share. They were down almost $1 a share. Huge miss. 702.5% miss. Again, you're going to get bounces along the way, but I think overall it should continue trending lower there. And I think that's what's going to happen with the overall market. What it does here. Let me see here. Oh, I thought I had, you know what? Let me see here. Let's look at this. Home Builders ETF here. They're popping up a bit here. Oh, did they break out above? Let me see here. I had a possible count here depending on if they broke out above or not on this. That's a high there of $80.72. $80.82. So still 10 cents below this. So if this is to fall off back here, it's possible it's just a really deep wave too. And then we're heading, much lower down here as a 1, 2, potentially heading down around $61 or so. You can see that we have this activity up here. This is the daily. We've got like this shooting star here, and then we've got this doji today, which has just made just a slightly higher high on that. So it's kind of up in the air about what's going on at the moment. But even if not, I think it's only potentially got a bit further up to go before it heads on down from that. Maybe it might go up another, maybe 10 or 20%, maybe. Because you would look at this as an ABC 1, 2. So you're looking at this as an ending diagonal. So, might hit $88 maybe. But I think that might be what we'd be looking at if it does break out. But if it doesn't, this doesn't look healthy right here. And as you can see, we're topped out here and overbought here on the daily Stochh RSI, daily RSI breaking out and overbought. Continues to rise on overlapping candle spreads, dojis, declining volume. You can see that you had this spike of volume right there, which is leading to what we have right here. So let's see how this ends and then how next week begins. But we could potentially be seeing this heading down further as long as it gets this reversal here. We want to see this break down below 76.49 there to kind of say, okay, maybe that tops in. And then we need further breakdown below 71 to say, okay, it is in. Looking at that. Oh, man, you guys talk a lot here. I got to catch up with you. Try to anyway. What's the Bitcoin top here? Most likely a blow-off or a catastrophic news, or both. You still think bleed into Q1? I mean, if the top is going to be exuberance. It always is. Market tops are they're never bad news. Market tops always come when people believe they can't possibly stop rising, right? And so you're always going to have that. It's not going to be like, oh, there's this bad news and that's what sends the market down, right? So, when it comes to that, if you're going to have a market top, it's going to come on good news. Yeah. It'll be afterward that people, after it comes down a bit, that people start getting maybe a bit more pessimistic. So, yeah. So, we'll see how this goes with it as it continues to rise there. I don't have any reason to believe that it's not going to continue up to 100,000 at least by the end of the year. Right now, there's nothing going on there to say that. So, there's no reason to change that as it stands. Let me see here. Alan, what's up, man? You said, what you got here? You opened a restaurant right before COVID. Employees, when we opened, had like 200 applicants for 10 positions within like 3 days. And the people we do get are just so entitled at this point. No gratefulness at all with having a job. Yeah, that's how people feel, yeah. He says, my employees are making an average of $18 an hour plus tips making smoothies. Whew. In Colorado. Man, oh man. He says, yeah, I'm not necessarily saying it's a living wage, although most of our employees are still in school, aka on their parents' health insurance. Something to think about for sure. He says, I've had employees leave to lower paying jobs because they can't do the math of what the tips add to their wage. And even after showing them the math, they still don't comprehend it. Yeah, no, man. Yeah, I see that. Again, I've got a lot of friends who own small businesses as well. And they kind of notice those same things, the whole employee issue right now. And so, speaking about that, again, if we talk about what the things that the administration's doing right now, Biden has his mandate, his vaccination mandate, right? Which is supposed to go, supposed to have everybody in these large corporations, these large businesses, vaccinated by January, right? Now he's going to get a lot of pushback on that. There's a lot of question about the legality of his mandates. Mandates are not law, so you're going to see a lot of legal wrestling back and forth about that. As far as what's up or not, I think there's like 12. I think the Republican-led states that are going to be probably taking him to court over it, taking the administration to court over it. But there is a question about the legality of mandating that these companies have to do this. So the mandate is either they have to be vaccinated or they have to submit negative COVID test every week. And within that, in that mandate, there's nothing saying that that the employers have to pay for that COVID testing. So it really becomes interesting in how this may play out here with it. And this has nothing to do with what you guys think personally about or what I think personally about it. However, we're just talking about, from a legal standpoint, is this something you can actually get away with? Interestingly enough, we find that during times of stress, courts tend to be, it seems like, more lenient with what the government does. The Supreme Court is supposed to protect the people against an overreaching government. It's supposed to delineate to make sure that the limits to the power are kept in check. And as we've watched over hundreds of years now, that hasn't happened really. So it is what it is. It's what they're supposed to do. We'll see how it happens if it goes in there. I don't know, but that kind of thing puts pressure on companies, puts pressure on a workforce. Again, we talked about the unemployment going down for those who are actually looking for work, but we don't take into account those who are not actively looking for work. And people feel very personal about this, about being forced to take this COVID shot. And so if they don't, or if they don't want to get checked, or if they, don't want to pay to get checked every week, whatever, again, you're going to see them coming off the workforce, which then just puts more pressure on the government as far as things it has to do, because now the economy has less people actually producing, right? Now, again, some of those people are going to think maybe, hey, listen, I'm doing great with my stock market and my crypto, and I can just do that. But, when reckoning comes, when the market reverses, they're not going to be, able to continue to say that. And so, they'll be looking for jobs then, which, is going to do whatever it's going to do as far as that goes. But that is something that will add to this whole thing of what's going on with the jobs market, I think, as far as that particular thing goes. So, yeah. Sorry, I had to block somebody there. And somebody number 2. Thanks, guys. But, get them blocked so they can't come back under those names again anyway. Let me see. But yeah, so, that's kind of what, when we're looking at all that, all this stuff, guys, is coming to a head. If you haven't zoomed out and just kind of taken a breath and just really looked at everything that's happened, there is, at least here in the U.S., quite a lot of exuberance. People are feeling generally good, about things. And so, this is what we usually notice that happens when you get toward the tops of these bull markets. Again, I think in that video I posted earlier, that link, I think they talk about that in relation to 89 or 99. Right before the dot-com bubble kind of thing went. The similarities between now and then. So, a lot going on there. But, again, guys, I can sit up here and talk to them blue in the face. If you're convinced that things are just grand and dandy and it's just going to keep on doing what it's doing, there's nothing I can say that's going to change your mind, right? And so I don't come out here with the intent to change your mind. I just come out here to kind of explain things the way I see it, the way I've seen it, learn to see it over, 25 years. And then some other things that are going on, and just to give you that information. Again, guys, you can lead a horse to water, but you can't make them drink. I can't force you to, to say, oh yeah, that makes sense or anything. But hopefully what I've done is at least got it there in the back of your head so that if things do start changing, you'll refer back to it and go, okay, well, maybe there's something to this. If it does, Again, I can't guarantee that things are going to work out as I think. They just generally tend to, right? As far as that goes over time, that's why I talk about them. But never any guarantees in the market. So what does that mean? That means you can still play the trend, guys. I keep talking to you about this. I still have people that get all of me and go, man, you said this and there, so I can't get in the market. Well, yeah, sure you can. Just don't get in thinking it's going to go up for the next 10 years or the next 5 years or whatever. Play where you're at right now. Don't be surprised if it turns down. There's a difference between right now and, say, 2009, March of 2009 when the market bottomed, right? There's a significant difference between now and then. So yeah. What do I think of the debt levels in cryptos in relation to tapering? I haven't looked at them lately. I've discussed it before. How everything, not just in crypto, but everything is becoming over leveraged. We looked at the margin for legacy markets and how that's basically just come to the point at which there's really not much of anything left in it. You can look at the breadth of stocks that what their breadth is. So their decline versus their rise daily, the number of stocks that decline versus the number of stocks that rise. So even if you're getting a higher high in your index, you can still have a lot more stocks declining during that time. You just have a few kind of kicking it up, right? And so usually, when you have that breadth shrinking, where you're having, more and more people or more companies declining versus rising, even as prices rising, that kind of, lets you know that you're getting thin, right? There's less and less ability to push that price up further. So we look at that and we look at, crypto there. I think crypto's interesting. I think if there was a sudden move down, people are just becoming so highly leveraged with that. Now, for their part, again, so if you've got, I think, Coinbase, with what they do, you can borrow something like, I think you can borrow something like 40% of your Bitcoin, maybe. And so, they've got this big function thing where you've got a lot of cushion in there to sell it. But my thought is, okay, so if you miss a payment or if it drops down below your level there and you don't add more in, I think you get like a day or two to add more in. They're going to sell off your holdings, right? So here's where the issue could be. If there was a strong drop in the market that stayed down, that could lead to liquidations. And, I don't know exactly how these companies sell. I don't know if they just go ahead and sell it right there on the market or whatnot, or if they would think about buying it themselves, if they're selling it to themselves or whatever. But if they're selling it into the market, that could give increased pressure, extend that move down, with that. So, yeah, I think that's something to watch there. They liquidate at any time. Yeah, it's all automated. So if your account falls below your level that you have it to be, it'll automatically sell off your enough. They say enough. I'm not sure. You'd have to look at what if you were to lend or to borrow from somebody like that. You'd have to find out what their terms say. But most of them just say, well, they're not going to sell it all. They're going to sell a portion of it so that you're back above that level. Now the problem with that is if you don't take the downtrend seriously, they could keep selling it off as the price continues to drop, and you could end up losing quite a bit, right? Yeah. I think for the most part they usually give you like a day or two, I think, to top back up. So if it drops below, you could like add more collateral in there. I think like Coinbase, if you borrow from them and your payment doesn't go through, because they credit it the minute you pay it. But if it doesn't go through, I think they give you something like 48 hours to correct that before they consider that you didn't pay, even if it's before your payment date. because the way they do it, they credit to you the minute you do it, and then they wait for the funds to come in. So that's always kind of interesting as well. Yeah. The best time, if you're going to borrow, the best time is near a bottom. It's not at a top. Now, if you're experienced in markets and you understand how to trade trends, where a price may actually be versus where you just emotionally want it to be, then there may be some situations near tops where there's going to be breakout and it's going to really rally, right? And then that would be potentially a place that you could borrow as well. But the problem is most people that are in the markets, guys, they don't have any clue. Again, you see it there. Everybody tells you just average down, right? But at what point? Most people don't know how to average down properly. Most people are undercapitalized to begin with. So there isn't really a whole lot that they can do with that, right? So, yeah, you get you got to think about how people actually are versus how they should be, or versus what you think they should be, or even you can get in here and go, yeah, I know all this, and then not implement it. That happens all the time as well. I talk about risk management being so important. So many people just ignore it. They're like, yeah, okay. I mean, they know they have to do it. They know they should be doing it, but then they don't. And you can't do that, right? Let me see here. So if we look at this, we look at the Dow Jones, right? So now my Dow count, I'm on wave 5 of 3 of 5, circle 5, right? We rallied up potentially. I'm trying to figure out what we've got going on here. This count could end up being invalidated, right? But that's why we got the invalidation level. So what we're looking at is potentially we've got this move here to my wave 4 target, which was right here around the, we gapped up this morning, right there around that. It could continue dropping, but what I'm really looking at is this breakdown below wave, parentheses 2 here at 35,891.73. That may warn that there's some sort of top in, whether it's, local or otherwise. Dropping down below wave circle 4 support here at 35,493 and 79 cents would add some confidence to that idea. But again, really, you got to get back down here below wave 5, way over here at around 33,847, to really kind of say, okay, the macro top may be in. This is your larger 4 count here. If we look at this this Dow Jones here, let me see. Do I have another chart up here? I did have another Dow chart. Let me see. Is that it? There it is. All right. So, again, this is really just kind of what happened. We just got this sideways going from this peak here on the 10th of May of this year. And it just kind of went sideways here. And then we rallied on up out of that. And as you can see, we're kind of hitting that R1 pivot on the daily. Now, from a pivot standpoint, this is important. We moved in sideways between the pivot and the R1. We're getting rejected the R1. Most often, that sends price back down to the pivot. If we lose the pivot, that's a big warning that a top may be in. But we give it the S1 pivot to potentially look. If it doesn't rally off the S1 back above the pivot, instead, it just gets a bounce or continues down, that top looks very significant at that point. So this shooting star up here, and as you'll notice on the daily, guys, this is a shooting star. This is up here. There's a gap between it. So if this is to close in this gap, leaving that gap there, that would be significant on Monday if it was to continue down and close down on Monday, because that leaves this kind of, right now it looks like a shooting star candle up here. That leaves that up there, and that's a potential reversal. So, we'll see how this goes. Maybe by the end of the day, this keeps on coming down and it, takes out that gap, but it still doesn't look good at all on the daily. So yeah, I've got this looking like a triangle here, right? So maybe like an A, B, C, D, E. Now I've got some counts going on there, but the bigger picture here, maybe it's a 1, 2, 3, 4, and this is a 5. You had good movement here. You're getting up here, but you're getting these very small, you're getting very small kind of doji candles in there as well, leading to yesterday and then today. And that looks like some sort of top in there, depending on how this closes today. But remember, this is that Dow chart. So, you got to remember, we're looking at this right here. If we look at this, so we're looking at, okay, so 1 and 2 down here, right? I just want to give you this local picture if you haven't seen it. Looking at 3 right there. And then we're looking at A, B, C, D, E. Just going to get this off there. And so this is a much more rare pattern. It doesn't happen a whole lot. It's a megaphone pattern or a inverse symmetrical triangle. So, a symmetrical triangle, you're getting closer toward the middle, right? So in a symmetrical triangle, which is what we see most of the time, you're going to go A, B, C, D. Oh, dang it, I hit the wrong one again. You go A down, B up, C down, D up, E down. And so you're doing this consolidation thing, right? Well, your inverse, which is this one, actually does the opposite. And each one has to go higher than the previous one or lower than the previous one, right? So you have this kind of, like I said, looks like a megaphone, right? And you get that. So, and this is a triangle, which makes this a wave 4, which means this is a wave 5. This is a wave 5. Unless this isn't correct, and I don't know how this is not correct because, if you read up into it, you get a wave 3 right here. And so, this is the low after this high over here. So, every time it gets higher and lower. So, again, wave 4 gives you this wave 5 here, which is what you would generally expect. So, this idea that it's going to keep going on forever and ever doesn't really make a whole lot of sense if you're getting in here, right? Kind of zoom on back out here. What I was talking about earlier, this 1999 or so to 2010 kind of area. 2011, I guess it is there. That looks a lot like that up there. Except this is just 3 waves, right? So this is, A, B, C here as an expanded flat. Okay? But that's kind of the same idea we're looking here, up here, which I guess probably the same. Except it doesn't drop below, you see? You got A, B, C. It looks like a, if you don't take this as a 3 and a 4 here, if you take this as a 3, this could potentially be a leading, a flat, right? And so, it stops right there. So you get your 3, and then you get your A, B, C down as A, B, C up as B, 1, 2, 3, 4, 5 down as C. Potentially is a flat there. And then you get this move up. But it's the same idea. That sideways, same idea. Kind of right here. Everybody looks at it separately as, you got your dot-com crash, right? And you got your GFC crash, but it's really just part of this larger reaccumulation range right here. If you look at Wyckoff. So you get your spring that takes it out, right? Hey there, Alex T. Good to see you. Oh, Ethereum, man. Okay, so like I said, I think there's a possibility that all this could extend into, summer of next year. That would coincide with tapering finishing out then, potential interest rate hikes coming. That time, maybe Q3. Second, maybe first one there in the summer, second one in fall. Or, maybe we get one before that. Again, this whole idea, I've left it open, again, we're going to kind of consider that the end is maybe going to end here as it usually does in December, but with the caveat that it may continue on into, maybe Q3 of next year, right, into the summer time. And so if you look at that, what are our stories with it? What's our narrative there, right? So the narrative, again, being Jay Powell is trying to be really loud about this idea that tapering doesn't mean raising interest rates. We know we've got Lagarde over there at ECB, pushing back. This woman doesn't taper or whatever she said, right? Off Merkel's whole thing back in the day. But So if we look at that, we say, okay, well, maybe the markets could continue to go higher, maybe, if with tapering still going on through there, and until we start getting those rate cuts, right? So that could lead us into there, and so that brings up Ethereum and Ethereum 2.0. I think if you listen to Raoul Pal, I think Raoul Pal was mentioning something like some kind of top in December, a pullback, and then the top, a few months later to coincide with the whole Ethereum thing we're going. Now, Raoul Pal is, I don't hate him. But he's a salesman. And, as people with money, you have to be aware of that. You can't just blindly follow. So I don't care how big and important they seem. He has got he keeps telling you he's stupid long, right? He's irresponsibly long, right? In Ethereum. Now, what he found out, he was talking recently in one of his newsletters he puts out. He was talking about the options, buying them leading out into Q2, Q3 at that time, right? And supposedly right after that, the options spiked, right? Everybody came in. So he understands he has a certain bit of power now. The question is, what is he doing with that power? And so is he trying to influence you to buy more so that he gets richer? Which, at the end of the day, if you're in there and you're making money along with it as well, it may not seem like such a big deal. But it kind of brings the potentially into question the ethical concerns there, right? I mean, he's mentioned he's long, but it seems like lately he continues to say it more and more. Like he's trying to get you emotionally into it. And you guys know, with me, I'm not a big fan of that. I don't like that. I don't often talk about my own holdings because it doesn't make any difference. You shouldn't be buying because I bought. The things that make me the trader investor I am are different than the things that make each of you the trader or investor that you are. Everything from our timelines to our ability of when we can trade and when we can't, physically when we're able to. If you have a job, you're kind of limited on when you can trade, right? Current wealth and financial positions, short, mid, and long-term wealth and financial goals, the level of risk aversion or risk tolerance that you have. All these things make you who you are as an investor or trader, which means they're different. You can practically guarantee they're going to be different than everybody else out there. So don't just buy blindly or sell blindly because somebody's buying or selling. The goal is to understand you, to understand what you're doing so that you can make the decisions that affect you most favorably. So I don't know, I've talked about there's a possibility we could have that run up into the beginning and mid of next year. I'm not saying that's what's going to happen. I'm not saying it's what's not going to happen. I'm playing it as it is right now. So right now, the thought is, okay, maybe we top out in December, which is what usually happens. But I am open to the possibility it might bleed out further. And again, not so much with Ethereum, but just with this whole idea of this 233-year cycle and how everything's playing out and how people are acting right now. So, yeah. But I think you should probably see the stock market and Bitcoin, cryptos, kind of dropping around the same time, I think, more or less. Now, what may happen on something like that, if everybody's listening to Raoul Pal and they believe, okay, top coming in, December, and then it pulls back, and then it goes higher, it shoots higher, surprises everybody into the beginning of the year. I think what you're going to have is you're going to have a lot of people holding. As you get maybe as a wave one drop, and then wave two's pulling up, and they're going to think, yeah, look, that was just a fake out. It's going to continue higher. And they're not going to sell. And then it's going to drop hard, even harder for wave three, right? Wave three is usually the largest, strongest waves, right? And they're going to end up losing a lot, if not everything of what they have. So my way to approach that would be that if you think there's a possibility that he may be correct, there's no reason not to take profit, some sort of partial profit, to make sure you don't at least end up with nothing, right? At what may be, a top in December, if it's showing signs of that coming back against you, right? And if you really believe that it's going to go up again, you can buy at those lows and ride it back up for that end of the thing. Because otherwise, what you're doing is you're holding when you should be selling, and it drops, and you're hoping it goes to a new high. And because you're hoping it goes to a new high, emotionally, it's going to keep you from selling. And so it's going to get up there and say, oh, well, we should do it, and it's going to drop again. And then you're going to be like, oh, I can't sell. I'm not going to sell because it's going to continue going up until it just drops like a stone below wave one swing low. And then you either get wiped out or you finally cover, but you've lost your money at that point. And so if we look at what could lead into really big economic disruptions, would be people who feel like they're rich on paper, but never actually realize those gains, and they do exactly that, and the market just takes them to the shredder, right? So, I don't know. Again, my time doing this, that's the way I would approach it. You don't have to. You can do whatever you want to do. You don't have to do that. But, again, that would just be the way I approach it. Because that way, no matter what happens, I've locked in profits. Remember, if it does that thing where it rises up better, it does something different than what it normally does. And when it comes to trading, I'm rarely somebody that gets excited about the market doing something that it doesn't normally do. That's usually a warning sign, right? And beyond that, most often it doesn't do something different. Everybody's always like, oh, this time is different. It's rarely ever different, guys. Most of the time, it's just the same. But at market tops, people find those reasons to believe that it's going to do that, right? Ethereum 2.0 locks your Ethereum. But here's the thing. Here's the thing. If your wealth is connected to what your tokens are worth, right, and you can't pull them out, guess what? You're illiquid when the market, when the recession or depression comes in, right? You are illiquid until they until they unlock. And then when you unlock, they might be worth a heck of a lot less than you ever bought them for. But guess what? You need money to buy bread and jam, right? You need money to buy your water and your beef broth or chicken broth to make you food for the next 5 days, right? I'm being silly here, but really, what Raoul Pal is touting as the big positive to it could turn out to be the big negative to it, because it's only worth it if it continues to rally up. If it goes the other direction, you can't sell. Guess what? You are SOL, guys. SOL. And if your wealth is tied up in that, you're going to watch your wealth do this, right? See, that's the problem I have with it there. Because it does. It locks you in. It's the same thing. We've got GBTC, the what's it called? Grayscale Bitcoin Trust. And so as you know right now, there's a lockup period when you join, right? When you buy into it. I think it's like 6 months or something. If the market tanks during that 6 months, again, you've lost money, right? Now, granted, they're filing to be an ETF. But, until that gets approved or whatever, I mean, you're illiquid. Your wealth is tied up in something you cannot touch. Everybody out there is talking about this greatness and how great it is. It's great as long as the market goes up, guys. If the market goes down, you are screwed. If your money is all in that and the market goes down, what are you going to do? There's nothing you can do. You are going to lose wealth. You're not going to be able to sell it to get you cash that you need to pay your bills or whatever else. And I think that's a big possible issue coming up with people in general. Like I said, as long as the market continues to rise when the lockup's in, you're good, right? But if the market drops, you have no way of getting out. You just have to sit there and watch it just decrease. And if it's a huge bear market, you get this big move down, and you get locked in at 80,000 or something, and the market's dropping to 20,000. I don't know, I'm just picking numbers here. But I mean, you lost a significant amount of your money. When it does unlock, what are you going to do? Are you just going to sell it at a huge loss? If you do, you're going to get some cash, which is okay. You need it maybe to pay your bills and whatnot. But if you don't, you're hoping it goes back up. So still, it's not contributing to your financial position because it's just sitting there. You're not selling it, right? So yeah, I think a lot of this over leveraging and stuff, and all this stuff that's going on with crypto and this locking up and all this kind of stuff. I think it has the potential to be quite damaging if the market turns down. Okay. Let me see here. Alan says, as an aside, Chris, testimony for you. Had a friend call me last week telling me he was getting all in on a short of car because of XYZ, overextended, MA, stuff like that. Looked at the chart and earnings coming and heard your voice to stay out of things around earnings. Called him and convinced him to wait for more info. Yeah, car popped up 200%. Yeah, Avis. Would have wiped him out. So unfortunately, he had a couple of friends who got wiped out on it, but at least you saved him. Yeah, that's great, man. I love hearing that stuff. People get so hyped up in missing out on the thing that they think could happen that they don't really pay a whole lot of mind to what could happen if they do it, the other way. And, that's more often the case than not when it comes to trading and investing. So this is the ARCA Gold Bugs Index, guys. If you guys don't know what that is, basically gold mining companies that are not hedged, a year or year and a half out, okay? So you can kind of consider them unhedged gold mining companies, okay? Interestingly, if we look at this, we can get 5 down here and we can get 3 up. So if I'm here, I'm thinking, man, this looks a lot like a 1-2. Again, this being an A, B, C here. Coming up, right? Then you get this 1, 2, 3, 4, 5 here. So why is this important? Because if your interest is in gold and whatnot, I think you might have some warning signs here. If this is going down, there's no reason gold should continue to rise, right? In the grand scheme of things, if your gold miners are down, right? So we may get a bit of a rally, but I mean we're looking at the weekly here, and you can see right here on the Stochh RSI, we're overbought, crossing down bearishly right now. We're under that weekly pivot. That weekly pivot extends to the end of the year for the next, almost 2 months, right? We're getting rejected right there at the pivot. We're getting rejected at the ascending channel EQ. I mean, logically, we should be heading down here to the support there. And of course, if you're getting a breakdown below wave B over here, that's going to lock this in as 3 waves. It's going to lock this in as 3 waves on the rally, drop it down. That becomes corrective. So minimum, you've got an A, a B, and a C, but you potentially just have a 1, 2 of A working out there. So, again, guys, when you're looking at gold and other precious metals, it's come down off those highs, right? And then it's kind of gone sideways. And all the time you got gold bugs swearing up and down that it's going to go up, go up, right? And, I'm still of the mind it's going to go down lower. We'll see if I'm right or not. But, if we look at this, I think this says quite a bit here. I think what you have here is you have a 1, 2, 3, 4, 5 here. 5 as like a 1, and then you've got an ABC, 1, 2, 3, 4, 5. So you've got, coming in here, I think what you end up having is a 1, 2 like that. Right here. And so if this is a flat for a 1, 2 here, you may, again, you're looking at wave 3. Oh, look at that, right there at the target, right here at the ascending channel support. Look at where wave 2 comes out, right there at the swing low, which is what you generally expect, right? So if you guys are following me, I often talk about this idea that when you finish, if you're rallying here and you come down, let's say this is ABC here, then subwave 1 should end right around where your top was, right? Same idea here. If this is an ABC and we're coming down, then subwave 1 should kind of end up right here, right? Because that was your wave C there. That's where it started. So, that actually lines up pretty well. I was not planning that. That just worked out really well. So if we've got a 1-2 as a flat here, potential wave 3 target down here at around 168. If that's dropping, why do we think that gold's going to continue to rise? This is your rise for gold right here, right? If we go in here and you look at your gold futures, for instance, we just change this something a little bit easier to understand here. Change this to same one. And so, again, in here, you see it with the same one right here, the 2016 low, right? Topped out here. And so what you have is this lower low here with your gold bugs and the higher low right here as we've gone kind of sideways with gold. So yeah, I don't know. Maybe it continues up. But if I'm looking at this right now, this looks like, one ABC here. It's rallied up, I think, about 50% of the drop here. Yeah, see right there around 50%. And so as you can see here where it got rejected, look at that right there. Previous area of support resistance. Look how significant this is. So, it's a significant area. I think if you break out above it, you're good to go higher, probably. But that is a pretty significant area of support and resistance right there. So, yeah. We got to catch up with you guys here. How could Ethereum have a major drop if a major amount of it's locked up? Just a question. Well, because that's what's available would be dropping. The value doesn't hold. Just because it's locked up doesn't mean the value holds. It's whatever. It's like when we talk about shorting stocks, right? We talk about the float. How much of that stock is actually available to be traded? That's what's important, not how much is out there. How much of it's actually... It's like the dollars, guys. It doesn't matter how much the Fed prints, how much of it is available to be used out in the public, right? And so since, again, the Fed prints, it has to go out into through the banks to get out into the broader economy. As long as it's sitting in the banks, it's not affecting prices, right? It only affects prices when it reaches out, when it's loaned out through the banks, or, you have the government, it's facilitating the transaction between the government and the Fed, right? Because the Fed legally cannot just print money and stick it out into the broader economy. It's illegal. It's against the law. It cannot do that. Which is why they had to set up those special purpose vehicles to do the whole corporate bond buying thing, right? So anyway, same idea with Ethereum. It doesn't matter. You can lock up 95% of the supply. 5% supply is out there trading. If it's being sold, if people are selling, that's the value goes down, period. Okay? So yeah. This chart right here, again, is just, it's the arc of gold bugs, and so basically index. And so what it is, it's just an index of gold miners who don't hedge out, a year and a half into the future. So we kind of consider them unhedged gold miners. And so generally, they kind of follow, as I showed you, they follow the same path there. And so we have this divergence showing up now. So we'll see if it continues down, and does its thing there. But right now, to me, it currently looks like an ABC here. Obviously, if it's breaking out above this, well, now we've got potentially 5 waves or something up there. Like I said, if you're getting above this kind of area, I think that's a green light to probably head higher. But it got rejected pretty well from there. And here we are on the weekly, crossing bearishly, rejected the weekly pivot after dropping through it. Rejected at the ascending channel resistance, all in that area there. That usually leads to the S1 pivot or the ascending channel support. Depending on which one you're looking at, and both of them end up same place there. Around January, February. They're both right in that same place. Which, as we saw, is the same as that wave 3 target, the 1618 extension of wave 1. Which is usually where we look for wave 3. So you got confluence in the S1 pivot, which, by the way, that S1 pivot won't be there when the new year starts. It'll be a new set of pivots, right? But nonetheless, for right now, and it could jump there, it could drop there further, quicker, right? It is a wave 3 after all. And it's going to be wave 3 of 3, right? So we should expect a stronger, harder push. But nonetheless, the S1 pivot, the ascending channel support, and that wave 3 target all have confluence in that same area. So yeah. So we'll see what happens. It's not looking good right here. Well, we'll see if it does continue. If we're dropping down below the swing low here, we should look for it to head on down there. Yeah. Let me see here. Craig Wright is in court right now to get the court order for Bitcoin miners to move coins from one address to another without keys. Thoughts on how this would affect the market if this actually happened? I don't know. Man, this whole Craig Wright thing, gosh, man. As somebody with a law degree, I find the whole trial fascinating, right? And now we're getting these insights into how this guy really is, right? And you're like, oh, this is like, I'm not into soap operas, but if you are, this is probably better than any soap opera you've ever watched, right? You've ever grown up on. He has done nothing yet that proves that he's got all these coins and whatever. I think it's a lot of showmanship, it seems like, and whatnot. I don't know, moving the coins, if people, if he can do something that moves them and it really moves, it's really because of him. I think that'll make people more skeptical because people don't like Craig Wright as it is. He's an evil, right? He's evil, right? That's what people think. And so if he does that, I think it's going to scare people. And I think a lot of people might end up selling out because they're fearful of what he may do because they don't like him. Remember, guys, it's all about emotion. That's what it's all about. People don't think logically. They don't tend to. They just think, with their emotions. So I think that's what can happen. But honestly, he's had all these opportunities to prove that he is, and he's not done it once yet. He's done other things that are supposed to prove. It's nonsense, right? We all know that, right? It's just nonsense. So we'll see. Let me see here. Hank says that the courts can't do anything because Bitcoin is decentralized, so they have no jurisdiction. Hank has a misunderstanding of laws, even his own country's laws, if he believes really that what he just said there. At the end of the day, you are subject to your country's laws. And so if you are a resident or a company that's legally, created in that country, and the courts say you have to do A, B, or C, you have to do A, B, or C. You can't not do it. No, it doesn't matter what Bitcoin in general is decentralized. It makes no sense. It doesn't matter. You or your company, whatever it is beholden to that country's laws. And whatever those courts say, you have to do. So, if he gets a court order saying that and the miner is in that country's jurisdiction, then yes, the miner would have to do it. If they're outside of the jurisdiction, they don't necessarily have to follow what the other country's laws are. However, there is blowback. There will always be blowback. And that's why I keep talking about, when everybody's always real negative about the U.S. and whatever and their control over the world, which I agree with is pretty ridiculous. But the reality, maintains. Because of what the U.S. gives these other countries in terms of support, whether it be military assistance or economic assistance or, whatever it is there, these countries tend to do as the U.S. asks. Because if they don't, then they don't get that anymore, right? Or they get a big reduction of that. And a lot of these countries, their health is determined by their interaction with the U.S., by how much they interact with the U.S. So there's always that inside. So yeah, legally, a U.S. court can't force a China-based company, some company that was formed in China or whatever, to do that. But, if, China could force that person to do it if there's some kind of thing with the government. Yeah. I'm not saying there would be. We're talking about small beans in the grand scheme of things, right? But, you are beholden by your country's laws and their court's decisions. Yeah, whether you want to be or not. Doesn't matter that Bitcoin's decentralized, right? That makes no difference. Everybody's thinking, the DEXs. These guys aren't going to be held responsible because the DEX is decentralized. That's so much BS. Did the guy who created the DEX, is he a U.S. citizen? Guess what? Doesn't matter that the DEX is decentralized. He's responsible because he created it. It's just the way it is, guys. Not just in the U.S., but any country. Same thing. Right? But yeah, so great stuff. You think Hank is Satoshi? Armands, what's going on, man? Well, good to see you checking in. I don't have time to check any charts. Unfortunately, it is 1 o'clock, so I'm going to have to get out of here. Real quick, guys. Hey, listen, if you haven't entered yet, don't forget to enter the giveaway here. We're going to do next Tuesday. We're going to do the drawings. And we're going to do it for this week and next week. And so it'll be 6 drawings. 2 winners of the PS5 with the Madden 22 and Ghost games. 2 winners of an annual Tier 3 membership. And 2 winners of a biannual Tier 3 membership. Remember, I see people still doing it, guys. If you enter, you have to verify. You have to validate that your email address. If you don't do it, then you can't be entered in the drawing. And that's a big thing because of like the privacy protection laws over there, across the water over there. And so, yeah, this is, so you have to do that. If you're not a citizen of the U.S. and you win, the grand prize here, the PS5, I'm going to give you a Tier 3 biannual membership, okay? Because the machine is only for the U.S. It won't work outside the U.S. So that way you still win, right? But if you are in the U.S. and you win it and you would rather have the biannual tier 3 membership, you can take that instead as well. If you're on Twitter, guys, I've got this Twitter right here. I'm going to go ahead and give you this link right here so you guys can do it if you haven't yet. And so you can go click on that link there and then share that tweet. And I'm going to actually have a drawing on Tuesday as well. Give away $100 in Bitcoin. I've got more Bitcoin giveaways coming up this month as well. You can win Bitcoin more than once. With these prizes up here, you can only win once. So if you win once, you can't win again. But even if you win here, you can still win this. This is a separate drawing. And each time I do a Bitcoin giveaway, you'll still have a chance to win it again, okay? So, but yeah, I'm going to give away more and more Bitcoin. I've got at least $5,000 in Bitcoin I'm going to give away. Maybe I might even make 10. I don't know. Definitely 5 though. I've got a birthday coming up in a few weeks, and we're going to have a huge Bitcoin drawing for that. So maybe $1,000 or $2,000 Bitcoin for that. So if you're interested, guys, keep following me so that way you know what's going on there. Finally, again, as I mentioned at the beginning here, here's the deal. If you buy the regular priced Tier 3 biannual membership, then your account's going to be set up to get that the OG legacy pricing. And so, if you want to renew after that for a month, a quarter, biannual or annual, this tells you the savings that you get off those normal prices. So, you'll pay $572.20 less for a yearly membership than you would with your regular one. Like I told you, if you're getting a regular priced Tier 3 membership right now for 6 months, this legacy pricing year, so 6 months more, is only going to cost you about $55 more. So just DM me if you're a current member and you're paying the regular price and you want to take advantage of that. just send me a message there on Discord, and I'll get with you and help you out with all that to make sure that you don't lose any time that you currently have. If you're not in with us yet, you can just jump on there and do it. And, we get notified, when we have new members. And I'll log into your account, and I'll update it so that you have the legacy pricing from then on. And I'll send you a DM that tells you, hey, listen, you are set up for that. All right? So there you go. A lot going on with that. Let me see here. So anyway, there you go. There you go. So that's where we're at. I hope you guys have a great weekend as always. I hope to see some of you guys join us over at howtotradetowin.com. Love to have you there. As most people find out, the amount of content that we produce that I produce on a monthly basis is just ridiculous for Tier 3. More than you can usually get through. Most Tier 3 members decide on the content that they're interested in, and they keep up with that, and sometimes they look at the other content. But that's all for you depending on how you, go through everything. But the education, man, is huge. I don't even know how many hours we have, honestly, right now. Well over 130 hours. We've got that, plus your 3 live streams every week with all that stuff. So, okay? So anyway, I'm done. I'm out of here. Remember, the only thing you control in the market is how much you lose. So keep on with the risk management, all right? I hope you guys have a great weekend, as always. And I will see you guys on Tuesday at 11 a.m. Central Standard Time, all right? Don't forget, the only thing you control in the market is how much you lose, all right? Have a great weekend, everybody. Take care.